Hello and welcome to this free Airbnb hosting training. My name is Mike Shogren. I'm excited to be here with you today. My wife and I are both Airbnb superhosts, and we're just very excited to put together this training material for you guys. So, in this initial training, one of the biggest questions that we get asked is how do you analyze an Airbnb property, right? How do you run the numbers? How do I know that this thing is actually going to make money? And that's exactly what we're going to tackle today in this video. So we're actually going to look at one of our listings that is in Salem, Massachusetts. Um, it's a 2-bedroom, 1-bath property. It just went live for us about a month ago. It's been doing very well. It's actually been rented out for the entire month, and the person just extended for a couple more weeks, so it's doing very well for us. So we'll use this one as an example. It's a pretty good property. Like I said, it's nothing huge, it's nothing fancy. It's just nice, clean, well-designed property that's functional for families, couples, business travelers. It can run the whole gamut. So this is a good one for us to take a look at. Um, so first off, just why should we even consider this, and why should we run this as an Airbnb property? If we look at a website called Rentometer, we can plug in the address of the property, and it will tell us on average what this property would rent out for on a long-term basis, right? So if we look here, we can see that the median and the average are about $1,800 a month for this property. But if we use a site called AirDNA, that's going to be one of the tools that we use during this training video. We can actually plug in the same address of the property, and it'll tell us what it thinks this property would do on a long-term basis. So I'm going to leave you with a little suspense right now, and we'll plug that address in after the fact. But the first step, what we're going to do is we're going to come over to this deal analyzer that I built. Okay, so let's make an assumption that you're going to rent this property. You're not going to purchase it. You're going to rent this property for $1,800 a month. So any of these cells in blue are what we're going to fill out. Call it $1,800 a month. It's one unit. And the first thing that we're going to start with is our expenses. Okay, so one of the things that we teach is you, even as a renter, okay, you're hosting guests. So you're going to want to have some type of insurance policy over the property. The homeowner is going to have their traditional homeowner's insurance if anything happens to the property, but you as the renter, as a responsible Airbnb host, you're going to want to have your own supplemental insurance policy that'll cover any damages inside the property and all of your furnishings to the property. We utilize a site or a company called Proper. It's proper.insure is our website. That's who we use. And on average, just for this property, we'll say it's about $800 for the year, $67 a month to get that insurance coverage. It may be more, it may be less. It depends on your market. So the debt service or the mortgage, I'm just going to change this to say rent because we're renting this, is $1,800 a month. The supplies, on average for a property this size, are probably going to be about $100 a month, give or take. When I say supplies, I mean all your toilet paper, your paper towels, your amenities if you offer soap, shampoos, makeup removers, lotions, bottle of wine, chocolates, all those things that we like to do in our properties to create a unique and positive guest experience. We want them to feel welcome. We want them to think when they first walk in and they see it, they go, "Oh wow, that was so thoughtful of them to do those things." So supplies about $100 a month. Taxes, we're not going to be paying property taxes because we're renting this property. Electric and heat, we'll just call it $120 a month. Water, about $100 a month. Cable, internet, about $100 a month. So our total expenses every single month, whether we rent out this place or not, is $2,407. Okay, we can see that right here, total expenses. So that'll carry on up to here. And then we want to make a profit, right? We're doing this to make money. So we want to factor in a profit goal. So if we were 100% occupied, what would we want to make? And let's just say we want to make $1,800 a month on this property, which sounds like a lot, but it's actually very doable. Okay, so $1,800 a month. Now your total revenue goal is $4,207 a month. If we divide that by 30 days, This gives you an average nightly rate of $140 a night, okay? Average nightly rate, $140 a night. We come over to here, and let's just say we're at 75% occupancy. Anywhere from 60 to 70 is pretty normal. 70 to 85, 90, you are doing very well, and you're optimizing your pricing and your occupancy rates very well. So we'll just say 75% in here. So this is projecting an annual revenue of $38,386, right? You've got average daily rate, $140 times a 75% occupancy rate. This is what you would generate on an annual basis, okay? So that gives us monthly revenue of about $3,200, less Airbnb's fees of 96 bucks, less your expenses over here of 2,407, gives you cash flow of $696 a month. Now, what does it cost to furnish something like this? Let's say on the higher end, I know that this property was about 8,000, but let's just say you spent even more. Let's just say you spent 10,000. Okay, your security deposit, some additional upfront fees. Let's say you're in it for 10,750. Okay. Now, one thing you're not going to see here is I'm not including your first month's rent or your last month's rent because you're basically prepaying that. Okay, that's not necessarily an investment. That's just you're prepaying January's rent and you're prepaying December's rent. So those are already factored in here in the expenses, right? This $1,800 a month is already factored in here. So I don't put that in your upfront costs to calculate your actual return on investment. But you will need to purchase furnishings, all the furniture, decor, plates, cups, mugs, Keurig, vacuum, towels, linens, all those different things. And we'll do a separate training video on all the things that you're going to need to fully furnish and get your property up and running. But let's just say that you spent $10,000. Your investment is $10,750. With a monthly cash flow of $696, your annual return is 77%. Now, I do not know any other investment on the planet that can get you returns like that on a consistent basis. Okay, now we're running numbers through a spreadsheet. How do we know what's real? Like, could we actually do this? Like, will it actually generate these kinds of revenues? Okay, so that's when we come over to this site called AirDNA. We log in, and they have a button down here called Rentalizer. Okay, so I can plug in the address for this property, plug in the number of bedrooms and the number of bathrooms, and this place sleeps 6 people, and then I click Analyze My Property. Okay, and this is the property, and this is projecting based on the comps that you can see over here, other comparable properties in this market for this property size. This is projecting that we can do about $51,000 a year in gross revenue. Okay, so if we come back over to here, we were projecting 38,000. This is saying we can do 51. This does include cleaning fees. So depending on how you want to do that, if you want to hire a cleaning company, which I'd highly recommend, you're probably going to average out right around where we landed, right here, about 38,000, depending on how often you rent it, the length that you rent it, right? If you're turning it over every single day, you're going to have more and more cleaning fees, but we're also billing those back to the guests. So that's why I don't factor in cleaning fees in these spreadsheets, because again, they're going to pay for your booking fee to book on Airbnb, and then you're going to add in another line item for your cleaning fee. Now, I would suggest that you cover whatever you pay your cleaners and then tack on an extra $5, $10, $20, whatever works for you to cover your supplies and your amenities that you're going to offer the guests. And if you can do it, charge even more and you can make a little bit of profit on the top. But that would be my recommendation. I would at least cover my cleaning fees and my supplies with my cleaning charges back to the guest. So again, if we compare what we were talking about at the beginning, this property on average would do $1,800 a month times 12. That's $21,600 in annual revenue. Utilizing this Airbnb model, it's projected to do $51,287. That is a massive jump. You've more than doubled your revenue. Again, that's not all take home, but still, you're generating a 77% return on your investment utilizing this model. So I hope this video helps. I am happy to share this. Again, use this analyzer at your own risk. I built it for myself. This is just what I use to run numbers on deals. I have another template over here. If you're going to buy a property, you can plug in the mortgage data over here. But it works the same way. Fill in your expenses, add in the purchase price of the property, add in the terms of the financing, and it'll calculate your return on investment. So again, I hope that helps. If you guys have any questions at all, feel free to message me on the various platforms, whether it's Facebook, Instagram, YouTube, or you can send me a note at info@occupiednow.com, and I'll talk to you soon.